What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Make sure you hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. Hitting that like button also really helps the channel grow. Thanks to all those who can continue to tune in. And welcome to those who are new to the channel. Now, the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades, all the way up through long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts, trading levels, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. We've got a couple of videos that dive deeper into that for you. Also, if you want some more information about the STRAT, which is the basis of our charting and trading method, make sure you check out the link to the free PDF quick reference guide in the description of this video. Gives you the basics for learning the strat, and then you can use this and go basically backtest charts on any time frame. The strat will work on any time frame, so make sure you check that out if you haven't already. And yeah, I encourage you to watch the full video today because we do go through triggers and targets for all time frames, so you get some pretty good insight on all time frames. And let's go ahead and look at today's agenda. First, we will recap the price action from Thursday, April 2nd. Before we zoom out like we always do, take a look at the week, month, quarter, and year price action. Then we'll take a look at the market makers expected move for the week of April 10th. And then we'll zoom back in to set what we call our 4-hour markers and then the triggers and targets for Monday, April 6th, the full week of April 10th. And we'll review the triggers and targets for the month, quarter, and year as well. All right. So let's go ahead and jump into the chart, starting with the 5-minute chart like we always do. This is how we take advantage of the proven and repeatable strategy that we use, and that strategy is simple. We make sure that we have the overnight high, previous high a day, overnight low, and previous low a day charted on the put up on the charts, and then when price opens, we mark where price opens. We call that the opening print, and we use that as our guide, right? If we get higher lows at or above opening print, then we want to buy calls. Looking to at targets of overnight high, previous high a day, so higher lows at or above opening print, you get into calls. If we get lower highs at or below opening print, then we want to look to get into puts, targeting overnight low and previous low a day. Right, so we had the gap down on Thursday, and immediately we basically got a bounce, right? So we knew, if you're familiar with this channel, if you get a gap down, especially a decent sized gap down, in this case it was a double gap, there is usually a higher probability of corrective activity at the beginning of the day. And then we see what happens once the gap has been filled, right? Do we get a gap fill reversal where we continue to push down through the day, or do we get that, really V-shaped recovery for the day from previous day's close, right? So you can see here, we had opening print at 46.06, just above overnight low, right? So we had the gap down, we had a 2 down, and then we had a 1, 2 down, 2 up, just at opening print, right? So there was your opportunity to enter. Now, one thing I will say is it wasn't a higher low, right? It was above opening print. And we had the gap rules, right, that we're dealing with, where we're looking for the gap fill, and then seeing how price reacts from there, right? So you got a very nice 1, 2 down, 2 up to enter on, right? So you take the entry at the high of the 2 down, which triggers the 1, 2 down, 2 up, one of my favorite strats, and you can see we pushed back up, got the gap fill, the double gap fill, soft higher low, more concrete higher low right here, and continue to push up to overnight high. So there's the first target hit, right? Now, it was quite a ways to overnight high and back to previous high a day. So it was probably a good idea. And also, I'm sorry, all the levels of resistance that we were able to get through, right? We have the month flip. So this flipped the month back green. The week flip, which wasn't too hard to get through, right? So opened basically on the week flip, flipped the week back green, flipped the month green, broke through that 50.76, the top of the resistance zone from 2025, last month's 50% level and last week's 50% level. Excuse me. Not to mention this 4-hour downtrend line coming through here, right? So we pushed up, we scaled out of half of our position here. We got the higher low, but it was followed by a lower high and higher low, right? So that would indicate consolidation, and that's what we got basically for the rest of the day. So after we got the lower high here, we waited to see if we got the lower low. Didn't get it, right? Higher low here. So it did look like we might start an uptrend, right? Higher high, higher low. But then we were followed by a lower high, basically being rejected by last week's 50% and that 4-hour downtrend. Not to mention we got back to the overnight high as well, right? So once we got the lower high, we looked to see if it was going to be more consolidation, where we're going to get the higher low. We thought here it was going to be the higher low, but ultimately it went lower low. So as soon as we broke below this higher low that we had previously set, we went ahead and sold another quarter of the overall position. So 3/4 of that position was gone. We got the lower high again and lower low. We went ahead and exited the position. Friday's, well, it was Thursday, but last trading day of the week. A lot of times you will get that first move in the morning and then just sideways action through the day. If you're familiar with this channel, we do like to start our weekends a little early, which was what we were thinking may happen today, just treating it like a Friday. But, after we saw this consolidation pattern, it was like, all right, that's pretty much enough. We'll go ahead and go on about our day. Now, we did keep an eye on the market just to make sure that nothing crazy happened that we would re-trigger something else that we needed to jump into. But you can see just went sideways through the day, got a little bit of fade back to the upside, or a push back to the upside at the end of the day. But that's really where we finished. There was a slight dip after hours, but after hours wasn't open for very long. But yeah, that's where we stand on the day, right? So decent move to the upside. Hope you were able to get in this on this 1, 2 down, 2 up, right at the opening print level for the gap close. Gap closed and we got more push. There was no gap fill reversal, so no two-sided action today. Just that push up and then sideways action, right? If we go to that 1 hour, let's go here. We did get, let me make this a little bigger. There we go. We did get a lower high, right? After this higher low, right? Remember we talked about previous day that we had so much room to get a higher low here, and that's what we got. So we got the higher low, initially a lower high here, but lower high here, made this higher low here. We pushed back up. We haven't quite made the equal high. So we would like to see Monday open and continue to push up. That would continue this uptrend on the 1 hour. But it did leave the door open for if the right catalyst happen over the weekend and we get downward pressure, and we open up and go 2 down on Monday, that does technically set the lower high. And we've got to see at that point, are we going to come back down here? This gap has been filled. Obviously, this is the chart from before the gap was filled, just to show where we went on Thursday. But do we push down and make a lower low at that point, which would technically continue or start a downtrend? But yeah, that's what we've got to see on Monday. Same type of thing for the 4 hour. There's not a lot that we can pull from it, just from the fact that there we go. We made the lower high followed by the higher low. So at the very least, it's consolidation. Now there is opportunity here as well to put in a lower high. Not as much room here, I would say, to put in the lower high, but it can still be put in, right? If we have the right catalyst over the weekend and we open 2 down and we continue to push down, we could get that lower low. So it would be lower high, lower low. Now we're looking at the start of a downtrend possibly. One thing I will say is market makers expected move low is down here at 45.03. So there's a possibility that we don't get that lower low. Maybe we get this lower high followed by a higher low. Basically create another higher low in here and continue to push up. That is a possibility, but it's going to be patience, right? Look at this. Since what's this, 2 weeks? It's Monday, Tuesday. That's 4 weeks of price action, just going sideways, right? So just keep an eye on that. Remember, we've got to be patient. Zoom out a little bit more and take a look at the day, right? We did we talked about on Wednesday's video. Yes, we got this big gap up and continuation, but we did get the wick on top indicating we could get the 1, 2 up, 2 down. That's what we got on Friday, but it just opened 2 down and pushed straight up. So again, it's more of a sideways action type of thing, right? So we got the lower high looking like this could be the higher low. So lower high, higher low, consolidation, moving sideways, right? At the same time, if we do continue with the 2 up on Monday, we got this 2 down, 2 up magnitude right at the gap open. Hopefully get that gap fill and see how we react at last quarter's 50% level, this 55.94 level, which is basically the top of the range. Do we get another little poke above and fail back down into the range, or do we finally push up, maybe get to that market maker's expected move high, and get some type of higher low here at or above last quarter's 50% level, and get the push up out of this lower part of this mini zone that's at the bottom of this larger zone that we've been in since the opening of January, right? So patience is the key, but we've started a pretty good move in the upward direction. We'll see here on the week chart why it looks that much better. Oh yeah, we just looked at the day chart, so let's look at the week chart. So looking at the week chart, make it bigger. We talked about in last weekend's video that we did have a bearish engulfing candle, a red 3, but it presented the opportunity for 3, 2 down, 2 up, and we needed to watch how the week ended up, even if we got the 2 down. And it kind of played out perfectly, right? It opened Monday, went 2 down. That was the low of the week. We pushed back up through the rest of the week. We got the 3, failed 2 down, meaning we've opened above where we closed above where we opened, and we've got that wick on the bottom, which, if just looking at that candle by itself, is more of a bullish candle than a bearish candle. And combined with the 3 failed 2 down, now we're looking at a good possibility of a 3, 2 down, 2 up. Again, if you're not familiar with the strat, take a look at the link in the description of this video for the quick reference PDF. Gives you all the basics with this exact reversal right here: 3, 2 down, 2 ups, 1, 2 down, 2 up, and 3, 2 down, 2 up are 2 of my favorite reversal patterns. So we can see we got the 3 failed 2 down this week, so we're just looking for the 2 up. If we do get the 2 up, the magnitude of the move is the high of the 3 from 2 weeks ago. Now the market maker's expected move is a little bit higher, so it would indicate that we would complete this 3, 2 down, 2 up and continue pushing to the upside. Just further showing that this was just an expansion of the broadening formation that we're in at the top of the move that we've made since the April 7th low. So again, more patience, right? On even the week and down is patience. Everything is I don't even want to say 4 hour at this time, because even that's more of a slow developing change. So if you're looking for quicker change, you're just going to have to be on the hour and down, right? And if you're looking for longer swings, you're just going to have to continue to be patient, right? So that's what we got from the week chart. We got the 3 failed 2 down, looking for the 2 up next week, which would take us back up into the middle of the overall range that we've been in, right? Looking at the month chart, let's make this a little wider. There we go. Actually get the weekly broadenings off there. There we go. So on the month, we talked about how in March we went 2 up, 2 down, got to magnitude and further, which triggered this one combo 2 up, 2 down, which has a magnitude down here at 28. But we also have the opportunity for March to be a higher low, right? And so far, we've got a decent start to the higher low path, right? So we have pushed up. We're back, at the middle of March's range, right? Really the middle of the whole last quarter's range, the beginning of the year. And we're just looking to see if we can continue to push up, right? We got the gap that's very close right above. Again, market makers expected move would indicate that we're going to move up next week, but that's remains to be seen. But if we do continue to push up, we're looking at setting March as a higher low. At the same time, if things reverse and we start to push down, if we get back down below this 39.50 level, then that re-triggers this one combo 2 up, 2 down, which would take us down to the low of the candle to the left of the one, which is this one right here. That would take us down to that $28 level. So again, got to be patient on the month. There is something that can trigger on both ends, right? We can trigger the higher low, 2 down, 2 up, which should push us back up to the year's highs and pressuring towards that 74.21 level all-time high. But if we continue to push down, then we've got that strat that would complete down here at 28. There's another gap down here as well. So again, both gaps could be acting as magnets in this situation. So again, just trying to be patient on the month. On the quarter, we're looking good. There's not really anything to trigger to the upside, right? Because we triggered that one combo 2 down, combo 2 up in the fourth quarter last year, continued on in the first quarter and ran to strat, right? The magnitude of that was 70.08, right? One combo 2 down, 2 up. The magnitude is not the high of the one, but the candle to the left of the one. So all the way up here at 70.08, it ran to that strat and we're good, right? Now we got to watch that, make sure we don't get the 2 down on the quarter, right? Because if we go 2 down on the quarter, that triggers a 2 up, 2 down. Magnitude of that move is down here. What do you know? At that $28 level, just like on the month. So just keep that in mind. If we do go down, there's a pretty good possibility we're going to hit that $28 level. Once you get multiple time frames that start to match up with ultimate target points or magnitudes, that's what you really when you start to see the price action go to that level, right? So just like on the quarter, the magnitude of the move was 70.08. If we look at the year, that strat has been run as well, and the 70.08 was the magnitude as well, right? We had a 2 down in 2025, went 2 up early 2026, 2 down, 2 up. Magnitude is the high to the left of the 2 down, which is up here at that 70.08 level, which again we ran to strat, and we just got to see how the year ends up finishing out, right? We obviously had that great push early on, but if we continue to push down throughout the year and get some type of red inverted hammer, then there's a good possibility that we go 2 down in 2026, and that's a 2 up, 2 down reversal that would bring us back down here to that 721 level that we were at back in April of 25, right? So not much to do on the year, but watch and just see how the year finishes out. Also, I mean, if things get bad enough, we start closing all these gaps and right catalyst to the downside. I mean, we could really make continue to make a broadening formation here, right? We're coming high, higher low, higher high. That would come down here if we make a lower low. Now we're making a broadening formation as opposed to this low. This low was higher than this low, so we had the higher low, higher high start to an uptrend, but obviously that would be voided if we go red 3 and get that lower low, just basically expanding the range that we've been in and just leaving 27 wide open at that point, right? So that's what we've got from the zoomed in view of Thursday's price action to the zoomed out view, all the way through the out to the year time frame. Let's go ahead and take a look at the market maker's expected move for this coming week. To do that, let's take a look at our options chain on Thinkorswim. If you don't use Thinkorswim, I'll show you how to calculate this in a second, but it's very easy. If you use Thinkorswim, just go to the options chain for this coming week, April 10th. Go over here to the right hand part of the of this bar, and you can see a number in parentheses. It's plus or minus 7.672. That is the market maker's expected move. They expect plus or minus $7.67 worth of movement from the close price on Friday of 52.75. Right, so $7.67 plus or minus. This will show what the range is here in a second. If you don't have Thinkorswim, the easiest way to calculate this is to add the at the money straddle. So the ask price for the at the money straddle 390 plus 370. Whoa. Why is this straddle so weird? Interesting. So they've got 50 cent premium in between. So you usually take the at the money straddle. So you take 390 plus 405 and you add it to the in the money strangle. So 375 plus 395. And then you, after you add all those four numbers, then you divide by 2 and you'll get your $7.67, right? So if we go out here to the chart, let's get a cleaner chart here. Oops, that's not what we wanted. Come on, there we go. So if we look on the weekly chart, There we go. All right, so if you take the 760, let's go to our notes real quick. 767, right? So if you take the 767, you add it to the 5275, you get 6042. You take the 767, subtract it from 5275, you get 4508. So the market maker's expected move for the week is 6042 to 4508, right? So if we go back to the notes, we've got 6042 marked here by market maker's expected move high. It's in purple. All purple lines or indicators reflect weak price points or indicators basically for the week. So we've got market makers expecting move high up here at 6042. 4508 is the market makers expected move low. So that would imply we're going to go 2 up on the week to get this 3, 2 down, 2 up. It would not imply we're going 2 down on the week. So at best 2 up. At worst it would imply, an inside week. If we open inside the previous week's price action, if we do push to the downside, the market makers don't expect us to go 2 down. But, if we just go push to the market makers expected move low and maybe bounce up a little bit or just move sideways, that is a possibility, right? But it's not expected that we end up going 2 down on the week. It doesn't say that can't happen, right? The market makers expected move, it's right about 70% of the time. So you do get certain times where you do go outside the expected move, but we've got triggers and targets on all time frames. So if that does happen, we're all right to with further out targets, right? So just wanted to show that market maker's expected move there. Let's go ahead and zoom in a bit more and talk about how we will attack Monday's price action, starting with the proven and repeatable strategy that we use for early morning scalps, right? Basically when the market opens, looking for scalps or just early entries into longer day trades, right? And let's get all the proper levels on the chart here. There we go. Make it a little bigger there. So on the chart we have previous high a day, overnight high, overnight low, and previous low day. Now obviously markets were closed on Friday for the holiday, but let's say that let's say they did actually start to push down a little bit, and let's just say that we get some price action overnight over the weekend that puts us back down here around, let's say it bottoms out around the month flip, right? So at this level is where the month would flip red if we go below, and it stays green if we're above, right? One thing to keep in mind as well, let me get a higher time frame just so we can see. If we look at the upper left hand part of the chart here, we do have full time frame continuity. So the week, the month, the quarter, and the year are all green. That would lend itself more towards the bulls having the advantage here, right? So just so you keep that in mind. There we go. All right, so for illustrative purposes, we'll say the overnight low is down here. We'll keep the overnight high up here, right? So the next thing we need to look for is the opening print. Let's say we open inside price action right around last month's 50% level, this 51.17, this green dashed line, that is last month's 50% level. So if we open around there and we push up immediately, maybe we get some type of rejection here around overnight high and we pull back, but then we get a higher low at or above this opening print level. We want to look to get into calls targeting overnight high and previous high day. Now there's not a lot of magnitude there, obviously. So we would want to see momentum once we get to those levels. If we're not seeing momentum, then obviously we want to either sell the full position for profit or scale out. Maybe leave a couple runners if you want to take a majority of the position. But you definitely want to start to scale out at this level. Again, we're hitting this 4-hour downtrend line, previous high day. Those will act as levels of resistance. But again, we will have our triggers and targets for like the 4-hour time frame, the 1-day time frame that we'll get into here in a second. So that if we do have momentum, we continue to push above previous high day, we will have some targets out there for you. So that's what we have there. If we get the higher low at or above opening print calls, if we open here and push down, maybe we get a bounce off of overnight low and push back up, but then reject off of that opening print level, last month's 50% level. If we get that lower high We want to look to get into puts, targeting overnight low, which obviously there's not a lot of magnitude there, but your second target is previous low a day, and you've got a lot more magnitude there, right? Now, you don't want to just think we're going to get to previous low a day, right? You've got to consider overall trend on higher time frames, things of that nature, support levels that you'll be hitting on the way down. But there is obviously a larger magnitude to the downside. So if we do have that downward pressure, downward momentum in the morning, that previous low a day could be a pretty juicy target for you, right? Let's zoom out a little bit more. Again, we talked about on the hour, we had this lower high, the higher low, but this lower high that looks to be put in, we'll see if we get this higher low, higher high combination to continue the uptrend on the 1 hour, up through this gap and try and press back up into the larger overall range that we've been in since January. Otherwise, we're just going to stay in this same range that we've been in for 4 weeks now, right? On the 4 hour, right, same type of thing. Let's get a little better chart here. Let's get it even cleaner. There we go. Right, so on the 4 hour, we do have the possibility to continue the 1-2 down, or get the 1-2 down, 2 up. This would be a 2 down. Make this a little wider for people. There we go. There we go. This would be a 1-2 down combo 2 up, or 1 combo 2 down, right? Because this 2 down and this 1, they just combined to make 2 down candle in comparison to this 1. So we'd have this 1 combo 2 down, 2 up trigger here. Obviously there's not a lot of magnitude there though, right? So you'd enter at the high of this 2 down, and the exit would be previous high a day, right? Now we do have the gap above that could act as a magnet. We could wick up, maybe we reject off of last quarter's 50% level. What was I going to say? Oh, we have this daily downtrend line coming through here, right? 4 hour and daily, basically in the same level. Excuse me. I don't know why this says market makers expected move low. This should be expected move high. I'm just bringing that up because it could act as a level of resistance as well, right? So just keep that in mind. Actually, why is that there? That should be higher. Yeah, expected high is up here at 60.42. So I'm not sure why I didn't change that other chart, but so yeah, scratch that market makers expected move high, but last week's high, right, is right there as well. That can also act as a little level of resistance. But yeah, we've got that, and right above the gap, we've got this 161.8 fib of the bull flag extension from the April 7th low. We'll take a look at that here in a second when we look at the week chart. But on the 4 hour, we do have the good possibility of putting in the higher low, higher high to start the uptrend. But then just remember that $55 level is the top of the range that we've been in for a few weeks now. So just could be resistance again, right, to the downside. There's opportunity for a 2-1-2 reversal. You would enter at the low of the 1, exit is at the previous low of the day, 46.05. So obviously some good magnitude there. And if we go lower low here, if we continue to push down, then that's looking more and more like the lower high was set on Wednesday of last week, right? If we go out here to the day time frame, oops, yeah, next day, there we go. There we go. Market makers expected move is in the right spot. All right, cool. If we look at the day chart here, right, we're looking at trying to set the higher low. So it'd be lower high, but higher low. And if we go higher low, there's a pretty good chance we would go higher high because there's not a lot of magnitude there. And we have the gap that is acting as a magnet. So if we go higher low, higher high, that does start an uptrend. But again, we're just getting back into the high of this range that we've been in for 4 weeks. And again, we're going to hit that resistance. So we really want to see a poke above, some type of higher low above the top of this range, and a continued push up on the day time frame. Otherwise, we're looking at some more possible range in this smaller range that is a part of the bigger range that we've been in since January. All right. On the week, we already talked about the possibility of a 3-2 down, 2 up. We've been talking about it since the week 2 weeks ago finished as a red 3, right? We knew that there was a possibility of just expanding this broadening formation on the week and getting pushed back up into this range. We had some couple of weeks, basically 4 weeks of, well, we'll count this one 5. So we had, red candle here, big red candle here, had a green candle here, but it still remained at best within the previous week's range. Then we had an inside week, which was basically indecision. Then we had the outside week, but to the downside. So, kind of a good indicator that the price would push down further. But because it was that 3 candle, we knew that there was a possibility for 3, 2 down, 2 up, and that's what we're getting here. So the question is, do we break through the top of this range that we've been in here for 4 weeks and get back into the upper part of the larger range that we've been in since January, right? I brought up that April 7th bull flag, or the bull flag from the April 7th low that's down here, right? So here's your flag pole, there's your flag, and here are your Fibonacci extensions from there. And you can see at its peak, we got to the 238.2 fib, right? We had some resistance at the 200 fib. The 161.8 tried to act as support here, but so far it's been resistance, right? So bouncing in between the 161.8 and the 100 fib extension, that's perfectly fine. But we got to see that higher low above this, $56 level to really have a good feeling that we're going to get back to the top of the range and be trying to pressure the top of the range to get that higher high. All right. But again, we came from a higher high to make this lower low. So we are just in a broadening formation. Yes, this 3 did present a soft higher low, but that's really all it is the soft higher low. And that's why you can see we've got this 3, 2 down, possible 2 up next week. All right. Yeah, that's what we've got on the smaller time frames. We already looked at the larger time frames on the chart. Let's get to the notes here just so we can kind of wrap things up for today's video. So for Monday, April 6th, there will be 188 trading days left in 2026. We know the close price on Thursday, April 2nd was 52.75. And then we know that, the week hasn't opened, so we don't know what the flip's going to be, but we know that the flip on the month is 50.14 to flip it red. Same for the quarter because, last month started a new quarter. So in order for the weekend, the month and the quarter to stay green, we've got to stay above that 50.14 level. And then if the year were to turn red, we would have to drop below that 45.13 level. So again, we are in full time frame continuity to the upside. The month, quarter, and year are green. Again, just want to see that week fall in line with them as well. Talked about the market maker's expected move for the week being $7.67, giving us an expected range of 60.42 to 45.08. And we know that we've got the gap real close right above at 54.44. We've got further gaps below starting at 28.07, which again is the magnitude on the month and quarter if we were to go to the downside. So just keep that in mind. And we talked about from an early morning scalping perspective or an early entry into a longer day trade perspective, we want to use that proven and repeatable strategy. Looking for higher lows at or above opening print to get into calls, targeting overnight high and previous high day, or we're looking for lower highs at or below opening print to target overnight low and previous low day. We just talked about on the 4 hour, if we go to the downside, that gives us a 212 down, trigger at 51.05, magnitude being 46.05. Pretty decent size move in the face of at the very worst sideways action right now. So in case it doesn't reach magnitude to the downside, we do have 2 points of inflection where price could either bounce or go sideways. If we go to the upside, we got that 212 up that triggers at 52.98, but again, not a lot of magnitude. Magnitude at that point is 53.07, but if we get to that 53.07, that re-triggers this 1-2 down combo 2 up, which does have a magnitude of 54.09. So another dollar we could squeeze out of there to the upside. Should we reach that 54.09, then we've got the gap close at 55.95 as the target. And then another extended target past that right above for you there. On the day, we talked about possibly going 1-2 up, combo 2 down to finish what was started on Thursday, right, or Wednesday. Wednesday was the failed 2 up. Thursday was the 2 down, but it was a failed 2 down. So The day could chop here, but if we do get more price action to the downside, that does trigger at 46.05 with a magnitude down there at 39.52. Just knowing that it is a decent sized move there. We do have these points of inflection where price could either bounce or go sideways. On the other side, if we go 2 down, 2 up, if we go to the upside, that will trigger if 2 down, 2 up. Remember we had that failed 2 down on Thursday. It was 2 down, but it was a fully green candle. So that would trigger at 53.07 and have a magnitude up there at 54.09. Should we get to that 54.09, again, we got the gap close as an extended target. There is a larger 2 down combo 2 up. Sorry, I didn't put that in here. Combo 2 up. There we go. Which does have a magnitude up here at 58.25. So there's a possibility to really get things running on Monday should we have the right catalyst, right? On the week, we talked about this would be a combo 2 down. Sorry. We talked about how we went 3 2 down last week, so there is a good possibility of 3 2 down 2 up. But let's go. That hasn't triggered. Sorry, I don't know why. I swore I did this. There we go. So if we do continue to the downside, right, that gives us a 3 combo 2 down, triggering at 45.96. We already hit these 2 targets that we would have because it's an extension of that price action. We just left them here to show that they were taken out from the original strat that triggered, right? And then we've got the extended targets down here for you if we continue to the downside. But if we do get that price action to the upside, again, we talked about this 3 2 down 2 up, triggers at 54.09, magnitude of 58.25. And if we get really get running, we've got some extended targets out here for us as well. On the month, just to review things, it is an inside month still. If we get below that 39.52 level, that does trigger this 1 combo 2 up, combo 2 down, magnitude being at 28.12. And if we go to the upside, that triggers the 2 down, 2 up, putting in a higher low on the month. And that triggers at 62.82, magnitude all the way up there at 72.36. If we get above that 72.36, we have some extended targets here for you. Really, I should have the 74.21 in here because that is the previous all-time high. So there we go. I guess I was moving a little fast doing these notes, but yeah, we do have the possibility for that 2 down, 2 up with a decent size move with the magnitude. All right, and we talked about on the quarter, we want to stay above that 39.52 level as well, because that magnitude on the monthly strat, 28.12 is the magnitude on the quarter strat as well. So want to stay above that 39.52 level if you're a bull. If you're a bear, you say bring it on and target that $28 level if we do get below that 39.52. Now, if we do get an extension of the 2 up pattern that we've been in, we've got to get above that 72.36 level, and then again, targets are all-time high 74.21 and beyond. Right. On the year, we already triggered the 2 down, 2 up, and ran the strat. Got to magnitude at 70.08, so we do have the extended targets of all-time high and those further out positions as well. But as of right now, we're just kind of sitting and waiting on the year time frame, right? But yeah, that will do it for today's video. Those are your triggers and targets for everything ranging from the scalping perspective all the way up through the 1-year chart. Try to jam in as much information as possible without taking up too much of your time. So we do hope you enjoyed today's video. Again, like we said at the beginning of the video, if you made it this far, a thumbs up goes a long way. It really helps the channel grow, and we do appreciate those who continue to tune in and give us those thumbs up. We like the community that we've started to build so far. Like we always say, leave any questions or comments in the comment section of the video. We always respond to those as well. So, again, if you enjoyed today's video, thumbs up goes a long way. If you think it might help somebody, a share goes a long way as well. If you want to share the link to the video. Again, this strategy that we use is not just for SOXL. It can be used for any ticker symbol. So if you want to adapt the whole strategy, part of the strategy, to add a little bit to your strategy and make it better, that's a great idea as well. And That's all we're looking for. We're just trying to help people, help make trading just a little bit easier. So again, thumbs up goes a long way, and we hope you enjoy the rest of your weekend. If you're watching this, Saturday morning or Saturday throughout the day, maybe even Easter Sunday. If you don't celebrate Easter, if you've got some extra time, we appreciate you watching, and we'll end the video like we normally do. If you're watching this Sunday night, anytime over the weekend, really, we hope you get some good rest Sunday night, wake up refreshed on Monday morning. If you're watching this Monday morning or Monday during the day, we hope you got some good rest last night, woke up refreshed this morning, and look forward to getting out there and trading with you.